The pandemic's getting worse. It's going to last longer than people think. The economy may or may not still be in a recession, but we are in a depression. This is the 6th coronavirus that's transferred to humans. Of the first 5, there are no vaccines. There are some treatments for coronavirus, but there are no vaccines for any coronaviruses. So hopefully we get one. That would be very good news, but you have to be a little skeptical of that. The pandemic's getting worse. It's going to last longer than people think. The economy may or may not still be in a recession, but we are in a depression that's going to last for years. And the psychological, behavioral effects will be intergenerational. This is not like 2008. It's not like the dot-com crash. It's not like 1998 with Russia and LTCM. You have to go back at least as far as the Great Depression in the 1930s, and maybe back to the 1870s to find something comparable. So my point is, I grew up in the 1950s and the 60s when I was a kid, and I did not live through the Great Depression, but my parents did and my grandparents did. And we were raised with a depression mentality, even though, times were good in the 50s, the economy was doing very well. But we were taught you go around the neighborhood with your wagon and collect tin cans from the neighbors for recycling. We weren't doing it for environmental reasons. We were doing it because it was steel and you could build tanks and planes with it. So in other words, even in prosperous times, 20 years after the Depression, we still had the Depression mindset. And it didn't really change until the late 60s when the baby boomers came of age. And then it was, rock and roll and prosperity and all that. But this is going to take 5 years to come out of statistically, but it's going to take 30 years to come out of psychologically. So that's where we are. As with the Great Depression, you didn't end up in the Roaring 20s. You ended up in World War II. And so you end up in a different world. People sense that. They may not be economic historians or they may not be behavioral psychologists, but they sense it. And they know that so far this has not been a financial panic. It's an economic crisis, yes. But the banks haven't failed. It's just that every single small business in America has failed. That's a very different thing. We're looking at 50 million Americans who have applied for unemployment benefits. They say if with a few adjustments, not very much of a stretch, the unemployment rate is on its way to 20%, worst level since the Great Depression. The way to understand the economy is it's a technical recession. So first quarter a negative GDP, second quarter, it's not announced yet, but it will clearly have deeply negative GDP. You get 2 consecutive quarters of negative GDP, that's a recession. We may be out of the recession already. The third quarter may show positive growth, but that's kind of irrelevant because we're in a depression. A depression is much more profound, much more long-lasting, much more damage than a technical recession. For example, people talk about the V-shaped recovery. The economy went down and then it comes right back up again. Well, it kind of went down and it came up a little bit, but it's still way below what it was. So you say, well, we had 10% growth. I was like, yeah, but you had a 40% drop and 10% growth. Okay, there's your bounce, but where do we go from here? And the answer is probably sideways or maybe down again. Maybe it's even like what they call a W. The point being, we're not going to get to 2019 levels of output until 2023 at the earliest. We're not going to get to 2019 levels of unemployment, get to those lows until probably 2025. This is a multi-year depression. It will have intergenerational effects. There's one study, very well done. There's actually 2 economists, one from the Federal Reserve Bank of San Francisco, another one an academic, that looked at every pandemic since the Black Death, 1350, that caused 100,000 or more fatalities. And their answer is there were 15, counting the current one, including the Spanish flu of 1918. But they had 15 pandemics with more than 100,000 fatalities, bearing in mind that the Black Death killed 75 million and the Spanish flu killed 100 million. That'll give you the order of magnitude. This one is going to go past that. This one will be, just in the US, will be more than 200,000, globally between 1 and 2 million or more. The point is, in looking at the economic recovery from those 15 pandemics of that magnitude, it takes 30 years, not 30 months. Wow. To normalize interest rates. And again, this isn't speculation or inference. They had very hard data. You can say this time it's different, but I don't see why. We're completely unprepared, and let me expand on that. But here's the point. So we talk about behavioral changes. So let's apply that to finance and money. And this is why monetary policy will not work, will not change the outcome. and fiscal policy will not change the outcome. Now, there are different reasons for those two conclusions, but let me start with monetary policy. They keep saying this is stimulus. The Fed cut rates, that's stimulus. The Fed's printing money, that's stimulus. They guaranteed the corporate bond market. They guaranteed the municipal bond market. They're buying mortgages. They're buying, everything in sight, and that's stimulus. Well, they are buying everything in sight or guaranteeing it. That's true, but it's not stimulus. And the reason it's not is because of velocity. Velocity is the turnover of money. So a simple way to think about nominal GDP, there are different formulas, but the easiest formula is what's the money supply and what's the velocity, the turnover of money. If you have $1 in the banking system, does it support $3 of goods and services, or $1 of goods and services, or $0 of goods and services? And the example I give is, I go out to dinner and I tip the bartender, and the bartender takes a taxi home and tips the taxi driver, and the taxi driver puts gas in her car. Well, in that example, my dollar has velocity of 3 because you had $3 of goods and services, the bar tab, the taxi tab, and the gasoline. But what if I stay home and watch television and leave my money in the bank? Well, that has velocity of 0 because I'm not spending it. And the point is, I always say you don't need calculus for this. Fifth grade math does fine, but $5 trillion times 0 is 0. Meaning if you don't have velocity, you don't have an economy.